Just within the space of yesterday night and this morning, I have made another money. I will not lie to you. I have many strategies I used to read markets, and this is one of it which I want to give you freely, the secret. What if I told you that yesterday's pattern can hint at today's direction without guessing? It sounds bold, right? Give me a few minutes and I will show you simple, beginner-friendly way to read it. This video is for educational purposes only and not financial advice. Always do your own research and manage your risk. Most beginners open a chart and feel lost. They see lines, colors, strange spikes, but a single candle is like a daily report card. If you can read that report, then you can stop guessing and start following what the market already showed you. First, what is a candlestick? A candlestick is a little box on your chart that tells the story of price for a fixed time, like 1 day, 4 hours, 1 hour, and so on. Then it has 4 key points. It has open, where price started. It has close, where price ended. It has low, that is the lowest point it reached. Then it has high, the highest point it reached. This thick part you are seeing here like this, good, is the body, which shows open and close. Then I think you are seeing the thin line, this line, this line. The thin lines at the top or bottom for both you are seeing here. We call them wicks. W-I-C-K-S, wicks or shadows. They help us to show high and low. This body you are seeing here is the main chapter. The wicks are extra notes showing how high or low price tried to go during the day. Then I know you'll be seeing green color and red color. These are candles which I have explained for you guys, but you are seeing green color and red color, which is green candle and red candle. Green candle means price closed higher than it opened, which means buyers push up. While red candle means price closed lower than it opened, which implies that sellers push down. For instance, this is green, which means price closed higher than it opened. Let's say this is the open price. Price starts from here, which is open, and is going up, down, like that. So price reached somewhere around here, which is high, and closed around here, which means the price closed higher than it opened. Price opened from here and closed here. You know now the thing will be going up, down, red, green, like that. But over the particular time, for instance, let's say 24 hours, the price later fall at or drop at this place, which is close, but it's above the price it started from. That will form green candle. I don't know how to demonstrate it such that you will understand. Let's assume the price starts from here, but instead of coming down, the price is going up. It may reach here and still drop down, still go up, but no matter what, the price later fall and drop here. So this place it drop, you know, is higher than where it started from. So the price go up from where it started from. That is green candle. Do you get it like that? But assuming when the price starts over the particular time, probably 24 hours or 4 hours, it depends on the time you want to use candle to read. Let's say it started from here and probably give fake high, come up and still drop. But don't forget it started from here and still drop, it come down, it go up again a bit, whatever. But anyhow, it ended up somewhere around here, which means the price closed lower than it opened. Then that is red candle. So you know the difference between green candle and red candle. Let's move on. I will show you how to use this to project what the next 1 hour will be, to project the next thing that will happen based on the market. I will show you everything. Let's move on. Please, if you're very new to my YouTube channel, make sure you subscribe to my YouTube channel. And dear viewers, please give me a like on this video, drop your comment and share this video. I love you guys. Let's move on. So anywhere you see red means that price pull back, and when you see green it means that price shoots up. How do candles usually move inside the day? This is not a rule, but often There's what we call bullish day and there's what we call bearish day. If you see candle like this indicates bullish day, and if you see candle like this red, it indicates bearish day or bearish moment. It depends on the time frame you want to use to analyze the market. I told some people in my status, if you have not connected with me, check the pin comment, you see link to connect with me on WhatsApp so that you can be viewing my status. I told them this morning, I said I have made another money. Just within the space of yesterday night and this morning, I have made another money. I will not lie to you, I have many strategies I used to read markets, and this is one of it which I want to give you freely, the secrets. You know how I read markets? If we are going to have bullish day, you will first see open price. Maybe let's go and use this one, and so that I will use this one now to demonstrate it for you. Probably you will understand the secrets. How do candle usually move inside a day? This isn't a rule, but often. As for bullish day, which is green, the first thing you will take note is this: a line, just a line. Then after then, it will dip a little. Then after then, it will climb high. You will see everything will turn green. It may be high again, then later come down and close above open. You know, this is open and close above open. So if something like this is formed, that is bullish day. That is what's happening right now. Just like today, look at what we are experiencing now. This is bullish. Are you seeing it now? The price have risen even to this place and is now here. Assuming it stop here for today now, it's above the open. So that is bullish day. I hope you grab. Let's go bearish day, which is red color. For bearish, the price open here, then it pump up high. That is fake pump. It pump up high a bit. I will give you another secret with that. I usually use it to make money, and I will tell you. So let's move on. Then it drop low to this place and close below open here. You know, this is open and it close below open. That is bearish day. Deep down, why this matters? It helps you plan where to enter, so you are not buying the worst price. What is market structure? Markets don't move in a straight line. They move like steps or stairs. Stairs. It come up like this, like this, like this, like this. So there is what we call uptrend and there's what we call downtrend. Uptrend is bullish, while downtrend is bearish. Like this now, this is uptrend. That is the stairs going up, higher, higher, and higher, low. While downtrend, like this one now, it means stairs is coming down. That is lower highs and lower lows. Let me show you just something like this. This is uptrend, this is downtrend, this is downtrend, this is uptrend. So inside trends, price take turns. You have continuation, pullback. Let me put it 15 minutes. Maybe you see what I'm talking about. Oh, good. Now look at the trend. For it, the price is going up like this, right? It's going up. But look at this now, uptrend. Look at this now, continuation, pullback, continuation, pullback, continuation, pullback, continuation, pullback. But it's uptrend. So with this strategy I'm teaching you today, we try to trade with continuation. For it, we have continuation and we have pullback. So we have to focus on continuation only, not against it. Let me zoom in so that you can see those continuations. So let's go deep down now and talk about the candlestick bias. What is candlestick bias? Candlestick bias means using yesterday's candle to guess whether tomorrow is more likely to continue up or down, especially when it matches the trend. That is where the main secret hidden, and I want to show you now. And that is one of the strategy I'm using to cash out. I have trained you in the beginning of this tutorial. You know that this is the body and this is wick. If yesterday's lower wick, this is lower wick, this is upper wick. If yesterday's, let me this is yesterday and this is today. All right. If yesterday's lower wick touches today's body in a downtrend, I have teach you about uptrend and downtrend. This is downtrend, is red color. So if yesterday's lower wick touches today's body in a downtrend, this means that sellers still look strong. Are you guys following? Means that sellers still look strong. That is, people are selling. They are selling their coin, selling their coin, and it's an indication for us that tomorrow, let me put it to this is today, right? Then tomorrow, we are using yesterday and today to predict tomorrow. what happened between yesterday candle and today candle, we are using it to predict tomorrow candle, and it's usually right. Yes, these are downtrend. If yesterday's lower wick touches the body, it means there is tendency that is going to continue tomorrow because the sellers are strong. So it means tomorrow is more likely to be bearish. That is another down day. Let's go practical. Let me go and show you. Don't forget, yesterday lower wick, if it touches today's body, not today's wick, today's body, like it's not compulsory that it must touch, but the wick is in line with today's body, it's a signal for us that the sellers are strong. They are still selling. And indication for us to project against tomorrow that the bearish will continue. It will continue now, so that it won't be like maybe I'm guessing. Let's go to the chart so that I can show you what happened here now. Today's date is, this is one day. Let me zoom in very well so that you can see what I'm talking about now. For sure, you know that this is bearish. This is downtrend. You know, this is downtrend. This you are seeing, red coming down, is downtrend. Now let's check it. How come? This is what we use to make money. How come? Let's start from here first. Let's check what? The lower wick. Look at this lower wick. I don't know if I can touch it very well here, or let me try. Look at this lower wick. If you check the direction of the lower wick, it's in line with the body of the following day, which is this one. Then what happened to the following day? The bearish continue and very strong. So if you want to play futures now, you want to trade futures now, it's a great opportunity for you to trade futures against the following day and make money. And look at this one also. When this, another one is this lower wick, when it touches the body of the following day, then on that same day, let's assume that day, this is the day, it helped me to project that tomorrow there is going to be more bearish. That is another down day. So are you seeing now? But it usually work within first day, second day, third day, fourth day, maximum maybe fourth day. It may not continue when it gets into like fifth days. It's not always working. This time I'm telling you, but it usually work well. It may not be every time, but it usually work. Okay, maybe I should show you another one now. You know, I like practical. Now let's talk about this uptrend. I've shown you about downtrend, which is bearish. Now let's talk about this one too. Look at this upper wick. And when we are talking about the uptrend, that is when we have bearish, the green color, then you will not talk about the lower wick again. We'll be considering the upper wick, because in bullish candle, which is green color, bearish candle is red color, right? But in bullish, that is upper trend, it usually starts from low like this. Here it's open, price open like this, it may be low, but it's going up, and it will close above the open, up, from down going up. Is opposite of bearish, that is from up coming down. If you watch this closely now, you see that this is open is bottom here. Why open for this bearish is up here coming down, but for bullish is from down going up. So let's go back to the chart. So let's focus on the upper wick for bullish, because this is green, right? Upper wick. Let's assume this is today. Here, this is today. All right. And yesterday, let's see, this is yesterday candle. And look at this yesterday upper wick. This is its upper wick up here. The upper wick now touches today's body. So as I'm saying it like that, it's an indication for us to know that this trend will surely continue tomorrow. This uptrend will surely continue tomorrow. So now what happened the following day? What happened the following day? Up again, up again. The same thing with this one. And if you check now, you see day 1, day 2, day 3, day 4. The fifth day now is coming down again. The fifth day now starting another day. Day 1, day 2, day 3, day 4. Which means there's no tendency that day 5 will continue with the trend. So like this one now starting from here now, if it ends today, look at today's one now forming, there is tendency that tomorrow, if tomorrow form now, let me now give you this secret now. We follow 24 hours. 24 hours UMC or whatever. If you are Nigerian now, like tomorrow now, you want to know, today now you are studying today now, that today is going now, you want to study tomorrow on. Like yesterday was, let me show you yesterday on here. This is yesterday on. Yesterday on was bearish, we know. But today on now, the way we are saying today, this is today on, is bullish. Now I want to know what will happen tomorrow. If I were you now, Nigerian time, you wake up by 1 o'clock, because 1 o'clock is the open market time in Nigeria time. That's about after the 24 hours, they will start another time, right? That's 24 hours on. All this thing you are seeing here is 24 hours time frame. This is 24 hours time frame, so that you can able to read the market early. Their own 24 hours will end by 23:59 something, right? In Nigeria time, 1:00 a.m. is when the market will start, and it end by 12:59 a.m. That is for Nigerian. So make sure you note it down that daily candlesticks chart typically opens at 1:00 West African time and closes at 00:59:59, which is almost some seconds to 1:00 Nigeria time. But globally, it starts from 0:00 UTC and close at 23:59:59 UTC. But if you are Nigerian, I have given you the hint. So when it's getting to that time, let's say price close here, this place like this. So what you will do is this. Let me come here, click on drawings. Then let me zoom it. Yes, zoom it very well. Good. Now click on this. Oh, good. Now tap here, tap again, complete. Now let me drag. Good, I'm dragging it. Let me move it. So I'll put it here now. I want it to start from where I think the price close for today. Probably I'll put it around here that the price is still within this range that we close for the uptrend. Then drag this one now to this place like this. Good. It's great. So click out. Good. Now close it here. Wow. So zoom it. Good. So the next thing now is I am expecting that any time from now, that is probably we are getting to like 1 a.m. Nigeria time. Maybe I'm saying that maybe few minutes to 1 a.m. Nigeria time. I'll be studying it that any time from now, market should open around here. Yes, around here. This line exactly where the last price closed yesterday. It will continue here. The trend will continue. So once it's open like this, it will dip a little. That is fake dip. A little dip here. At times, it can move down like this, but it's still going up, back. Now, opportunity you have is this. The moment it's forming the fake dip, you know that this thing is supposed to trend higher again, but the market open, then it will dip a bit low, right? That time, it's dip low. It's a great opportunity for you to enter the market in order to make what? Discounted profits. It's a great opportunity because you know that this thing will still push up. Why I put this rectangle here now is just for you to know, like taking advantage of the dip, that low dip. So once you see like this, and this is what you will do. Once you notice that this is going deep, just try to change this time frame to 1 hour. It was 1 day before, so change it to 1 hour. Let me change it because you want to study that early dip. So let me use this one as instance for you, but so unfortunate we are having downtrend with this. But now let me use this one to explain. Let's assume it's coming down like this. Just wait for it to come down, and when it's coming down, just be watching as it is dipping down low. Be studying it. You can still come to 15 minutes. Yes, 15 minutes. Okay, good. 15 minutes will give you accurate information of when to enter the market. Look at it now. Within 15 minutes now, it's coming down, it's deep. So let's assume that this is deep, like this now. This is deep, which I call fake dip, right? Fake dip is coming low. But when it gets to this place now, you'll now notice, oh, I'm even happy with what I'm seeing here like this. Look at what is happening here. Like it probably want to start going up. You notice that, this thing has started going up. It's forming green going up. That means it has reached the limit for the fake dip. So when you notice the green that is coming back up again, it's under 15 minutes time frame. You started with 24 hours time frame is the best for this method. For daily candlestick bias, 24 hours is the best to give you accurate. Then for you to be sure of when to enter the market, that is when we are making use of 1 hour, then come back to 15 minutes again, so that you will know that, this thing is coming up. Just like this now, you see that it's coming up, it's returning back to its open price coming up again. When you now notice the uptrend again, then it's a great signal for you to quickly enter. Just enter like that. It's a great opportunity for you to make money very fast, because this thing will still return back. Now when you enter, put it back your 24 hours or a day, then you will now be studying it. That okay, probably is coming up again, but you have already entered the market at a very discounted opportunity. Then it's pushing up for you to make money. This is a great secret. So by the time the trend continue, just like what we are seeing here now, you are making profit. Of course, you are making money. That is not all. You can use other indicators also, at least to back it up, to be very sure about the trend. Yes, but only this one, if you can master it very well, carefully, you make money. I know some people will be saying, this thing is very simple. Yes, it's very simple, but simple with structure plus risk control, which will help you to beat complicated guessing. So I hope this tutorial have helped many of you viewing this. And let me quickly give you the recap of what we have learned so far. If you are looking for a bullish day, that is, you study the market and you see that we are going to have bullish day. Number one, the first thing is daily charts. Confirm the uptrend, which is higher highs or higher low. Step number two, check if yesterday's upper wick touches today's body. Don't forget, yesterday, check if yesterday's upper wick, because we are talking about the bullish now, uptrend, bullish, uptrend. So check if yesterday's upper wick touches today's body, which is bias bullish. 3. Mark a tradable zone from yesterday's close down to yesterday's low, which I have done it for you. You see where I put the rectangle something, yesterday's close down to yesterday's low. So that is your tradable zone. Mark it. 4. Wait for today's open. I took my time to demonstrate, even to let you know as a Nigerian, so that you don't make mistake, that 1 a.m. West African time and globally is 00:59:59. Is it UTC or something like that? I have given you. And don't forget that price often dip first. I have explained for you guys, so don't tell me that you don't understand though. Once price open, you will get dip, and I call it fake dip, before it will now be pushing up again. Don't forget, we are still treating bullish, which is uptrend. So anything we are talking about now is about bullish idea. So price often dip first. So that dip into your zone is the discount for you. Enter the market. Great opportunity, because you know that it's a fake dip. It will soon bounce back to where it's heading to. I think we are still under 4, right? Then the fifth one, is 24 hours before 1 day. Yes, 1 day time frame. Then change it to 1 hour. After the 1 hour, you have checked very well. Then put it 15 minutes. You want to be very sure when to enter market. How far with this thing? Is it still going down or is returning back? Don't forget, I said when it's returning back, enter, because you know that it's done with the dip. Now trying to retrace back, then enter. So that is under 15 minutes. That will give you that indication. Wait for a change of character. That is when price starts making lower lows and start making higher highs, then enter. The sixth one, enter when structure flips up. Then the seventh one, that is risk management, because what we are saying is not always correct. Yes, it's not always correct, but it's usually correct. But should in case it fail, the strategy fail, how will you manage the risk? That is the seventh one. That is when you bought the coin and probably want to sell it, or when you put limits, or no matter the strategy you want to use to trade the coin, put stop loss. Don't forget to put what? Stop loss. Stop loss below the recent swing or zone. The aim is at least 1:3, which is risk ratio reward. The risk is just 1. The reward is just 3. So which means you risk little amount of money, but you aim to make maximum profit, because you know that this is bullish. Bullish is coming, but should in case it fail you, in order to protect your capital, you put stop loss. So I don't know your aim for this, either it's for futures or whatever, but always plan for 1:3. Your risk is 1, while the reward is 3. Now let's talk about the bearish moves. I have explained the bullish. Now let's talk about the bearish. Step number 1 is daily charts. Confirm downtrend. That is lower highs, lower low. Confirm it. Step number 2, check if yesterday's lower wick. This time it's not yesterday's higher wick. Yesterday's lower wick. Check if it touches today's body, then that is bias bearish. It's not bias bullish, bias bearish. Step number 3, mark the zone. That is mirror logic. Step number 4, wait for today's open. Price often pop up first, then that pop is your better shot. Step number 5, from 24 hours or 1 day, drop it to 1 hour, then 15 minutes. Then wait for a change of character. When price stops making higher high and starts making lower low. Then step number 6, enter when structure flips down. Then the 7th one also is risk management. Still the same thing. I believe you guys really understand it now. You know the bearish, you know the bullish, you know the color difference, you know the indicators, you know uptrend, you know downtrend. So if you have questions for me, drop it for me in the comment section and I will respond to that as soon as possible. But let me give you these common questions. Question number 1 you may have is, can I use this in 4 hour or 1 hour instead of daily? If this is your question, then yes. But the higher time frame, the cleaner the signal. Many traders learn on daily, then adapt to 4 hours or 5 minutes for speed. Another question, what if the wick doesn't touch the body? I don't know if you think about this. All I train you is about if wick touches the body, then the advantage we have over it. What if the wick does not touch the body? It's not like it touched, but in line with the body. It's not wick to wick. Wick in then body, we refer to it as touch the body. What if yesterday's wick doesn't touch today's body? What will happen? Then if that is the case, that means there is no bias from this rule. That means you should wait for another day or look for other conferences because you are not sure yet. Only stick with information you are sure about. If you don't see anything like that, then there is no bias rule. Leave for that day. Ignore it for that day. Till when you be sure that, oh, this is bias rule, then you take advantage of it. Question 3, you may ask, what if today gaps far away from yesterday? My answer for you is this: gaps can break the niche touch. In that case, don't force it. Trade only when the pattern is clear. Then you may ask if you will need indicator. My answer to that is no. Price plus structure is enough. Indicators are optional helpers. Now you have seen how to use yesterday's candle to predict today's price move. So test it. You can backtest 20 days and tell me your results in the comments. So if this tutorial really helped you a lot, please, I beg you, subscribe to my YouTube channel, like this video, and you have questions, drop for me in the comment section. I will respond to that as soon as possible. I have special course for crypto trading. You can enroll for it, of course. Just check the pinned comment, you see link to connect with me, then you will see my courses. Please share this video because there are many people that will benefit from this opportunity. Share it. This is one of the strategies I'm using to cash out every day. So guys, I love you. Till next time, see you guys in my next videos.